What's going on, YouTube? How's it going? How's everyone doing today? So, as you can see, and I'm sure the thumbnail may have clickbaited you like this much. Kind of, sort of. Just worded it different, you know? It's the same thing. So, up there, 2 different types of entries to use, and we're going to have a little bit of music background too. I think it's going to make the videos even better. So we're going to turn it down and get this thing rolling. So, 2 we're going to use are going to be breaks of highs and lows of candles, which I have used on the live streams for a very long time, and closes of candles, which I'm now using for all my entries, and that's the main thing I do use. And then we'll kind of cover why I did switch, pros and cons of each, and stuff like that. And we'll go through some examples and when the best time to use these 2 kinds of entries would be. So let's get this thing going.
Don't at me if it gets too hard. When it's my time to drink,
all right. So first, we're gonna start with breaks of highs and lows of candles. So some of the benefits: you're gonna get a little more confirmation that the candle is going to continue in your direction than you would if a candle just because a really big thing is if you look at candles like here, obviously we have support here, but for the purpose being where we keep here, we had a bullish close kind of confirming some support, maybe we moved up and we just broke the low. The high was never broken, so there was no confirmation price would continue in that direction. Same thing here or here. This one we did have a bearish one that did break the low, but then we just ended up ranging, so not really matter. But if you look here, look at these candles all coming down. None of the highs were broken, and we're on the 1 hour, so we got pretty solid confirmation. If we look starting from here, not a single hourly high broken until right here, and after that happened, price changed directions. And then if you look at the bottoms on the way up, right after this one, obviously, once we started to change the direction, low was not broke, low was not broke, low was not broke, low was not broke, and then again, and then now we broke the low again, and price changed direction. We did break the high here, but important resistance that there's something up here that we should be aware of. And this wick right here, this guy, looks like it might have been having a little bit of an issue. And then obviously if we drop into the 30-minute, we'll find some more information on that one. But for breaks and highs and lows, you get some better confirmation. That's going to be really the main one for kind of the pros. And then price usually moves pretty good in that direction. The downside is your risk to reward. So well having a better confirmation, which means you're going to have a higher hit rate or strike rate or win rate, whatever you call it, that's going to be higher, so that's good. We could say that's another pro. You got better confirmation, but in turn that would just mean kind of the same thing, but different way to put it is you're going to have a higher win rate, essentially. But then the downside, so you're winning more, but the downside is going to be your risk to reward in most cases. Sometimes it gives you better risk to reward, but most of the time it's gonna need to be a little bit bigger of a stop loss, which then means you need a bigger target. So like this one, for example, this one worked out, but if you took it at the break of the low on the candle, once the low was broken here versus the close, I mean 2 pip difference, so you have a 16 pip stop as compared to having 14.5 pip stop. So again, not too big for that example, but like if we took this example here, or like this example, we'll do this one. This one's kind of the same. So if we entered at the close, once this high was broken here, and actually while we're here, this is one point that's going to be important, is there's not much of a wick on the top of this guy. So ideally, when the high is broken, you're going to want it to have a wick because that's just going to be a better confirmation. Like this one, it has a little bit of a wick, but we also got other wicks right here in this area too. But when this one broke this one, that was good confirmation, and now this one broke this one, even better. So let's say when the high of this one. So if you entered on the close, you're going to put your stops there for 7, 4 there for 13. You hit 2 to 1, 3 to 1, right there is a win. And then again, it is end of day on Friday, but just purposes. Got in at the break of the high. So our stop before on the close, 13. Getting at the break of the high, now you're at 17. So it's going to affect your risk to reward a little bit. Versus, let's say, if you got in at the close on the wick, could have got in halfway on the candle. Could have turned that 7 or 13 into 10, or the 17 into 10, and now you'd be able to reach a better risk to reward. You're able to get break even sooner, stuff like that. Overall, really good confirmation. It's just in some cases it does really mess up risk to reward. So if you only have 10 pips of clean traffic, but your entry is a 12 pip stop, maybe you gotta let that trade go, where the person who takes it on the close is able to reach their 1 to 1.5, 1 to 2 risk to reward to benefit from that trade. And then the next one, really simple, this is a really popular one, is closes. So price closes bearish at a resistance, that will resist downtrend. Or get resistance here and close bearish, you come back down, we got nice traffic. That could also work. Buying support there once we close bullish, also it worked, as well as it was resistant left and became support. Overall, we kind of made a high, higher low, higher high, again came down, higher low. So you're kind of trading that with the structure. That's going to be good. But the benefit of the closes going to be you can get in your entries on the wicks, and then you just kind of your idea is that for this one, say your idea is support's going to hold, and it's going to go try and test the high. Close bullish, get in somewhere on this risk, get like, I don't know, not perfect, but if you were perfect, you could have had a 6 pip risk, and you would have hit 2 to 1 just in that one candle. Or if you got in here, you got a 10 pip. You're able to get a better stop loss, which in turn is going to give you a better target. So if you have a 6 pip stop, you hit 1 to 1 at 6 pips, where someone with a 17 pip stop, 1 to 1 at 17 pips. You can kind of get in and out quicker. But like this one had no top wick, and then we closed bearish, so maybe you're getting a little antsy on that trade. But if you got in on the wick, you're probably just able to sit in profit. You can get break even a little bit quicker too, especially again with that better stop loss, smaller stop. You can target the same distance. So someone, again, 15 pip stop, if you're targeting 30 pips, that's 2 to 1. But if you have a 5 pip stop and you target 30 pips, you got a 6 to 1 or 1 to 6 risk to reward, and that's really, really good. So the benefit is going to be you're going to get better risk to reward, smaller stops, and your targets can be not greater, but you'll be able to the target will be greater because of your stop loss size, which would then determine your position size. So that is going to be kind of the benefits of the closes. Kind of go through a few. Again, this is a really simple, basic video, but I get a lot of questions on breaks of highs and lows or closes, which are better. It's not necessarily which are better. It's kind of which are you more comfortable trading. So do you feel, so this was the point of the video, is people can kind of see what they need to look for, and then you need to go out and try it on your own and figure out which style makes you feel better in your trade. So like when your trade's a little bit against you in the negative before it's kind of gone into profit, how do you feel? Do you feel like it was still a good trade? Are you still confident it's going to continue? Or are you kind of second guessing everything, looking to maybe get out because you just don't like it? So if you feel like that, maybe try the other one. If you're doing closes, maybe try breaks of highs and lows. See how that makes you feel. And whichever makes you feel better in the trade is ideally going to be better for you to trade. So let's check my notes. Make sure we covered everything. Closes, you could say they might be a bit riskier, but then you're just trading support and resistance. It might have a tiny bit less of a hit rate than the breaks of the highs and lows, especially if you're trading closes in your direction and breaks of highs and lows. That's going to be really high. I would say if you use them together, that's going to be the highest hit rate. If you're using them individually, they're going to be pretty close to the same. Might vary a little bit week to week, but long term it's going to be pretty damn close. Only thing that's going to be different is how you feel in the trade. Unless you're combining both, like I said, then I feel like you're going to get a little bit higher of a hit rate, because that's just a lot of confirmation in your direction. So if you get those two confirmations met, it should be a pretty solid trade. So let me go to GG. I've been looking at AJ a minute. So first we're going to look at highs and lows of candles. And again, I've done this in a previous video that might be good to check out. But we're going to run through some candles real quick on just highs and lows and how candles look. And then we're going to look at support and resistance when candles close in the opposite direction. See how that kind of looks. So we'll just start here up at resistance. From resistance initially, price broke the low, the high was not broken, and we closed bearish again. Kind of got clean traffic down to this support. This one broke the low, didn't break the high, down, and then this one. So we're not even looking at. Imagine these are all the same color candle. This low here did not break this low. This high here did not break this high. So no real direction has been chosen yet. And then we get this candle, higher low again, higher high, price went up. If we look down, if we look here, price came down consistently until price stopped breaking the lows of the previous candles, which would mean in terms of structure wise, if we're looking at the candles, kind of like candle structure, you could say, price stopped making lower lows and started making higher lows. And higher lows are uptrend, so higher lows, higher highs, push up and get higher low, and a higher high, and price goes up. Again, still at resistance, we close bearish again. Price made a lower low, lower high. Maybe we're going to start coming down if we can break the low here, and again, break the low, lower high, price comes down. This one, lower high, and then no lower low yet, but we have a lower high, so now we're just waiting for that lower low. Price breaks this low, and we get our lower low, and ideally it does just fill here and come down. Same thing again, this one kind of broke the low, but then it has a lower high, so maybe we keep coming down. Then this one makes a higher low, tells us we break the high, and price pushes up, then end the day. So there. And now same thing here, let's look at just the closes. Close bullish, price moved up. But if you notice, when we closed bullish, we still made a higher low and a higher high. So if you're combining the two, that would have been your entry above there. Price closed bearish, and we got another lower high. Price came down, and now price is closing against you. So the probability of it continuing your direction, much lower. Close bullish again, stronger than the previous. Maybe price will push up as long as we maybe respect our lows. But if we're just looking at bullish, we pushed up again, and then we closed bearish. Now we're coming back down, going bearish and bearish and bearish and bearish. So that's kind of what you can look for in terms of closes. So I mean, here we got this strong bullish close, and then we kind of die out, get a little bit of a nothing game. Very weak bullish. Close bearish again. That would be an entry. So with the closes, what I found best is, so when they change directions, like if this one changed direction, you bought support, lost. If you had your stops under here, you probably got out of break even. But if you bought this bullish candle, stop underneath, lost there. sold here on this close, a stop above here. Looks like you would have won, but that would have been a really stressful hold, and you probably didn't sit through it for it to come back into profit. Ideally. So it's not perfect, but the best way, both of these going to be buy low and sell high. So when you're closing bullish up here, your entry down at the bottom. Down at the bottom. This one, not a really good close at all. Looks like it's more so rejecting the top, rejecting one side. So that would have been a potential winner, but just not a trade. And selling high, prices up kind of at the top, closing bearish, and that's it's kind of trading against the trend. So you don't really want to wait for something to close direction. And during a session, well, that's gonna be the last thing we get into, is when these are going to work best throughout the sessions. Timing, and then the timing of the sessions. So closing bullish at the bottom, yes. Bearish at the top. That's how you're gonna wanna do that. Again, if it is against the trend, wait for it to come back with the trend, whether it be the higher time frame trend or just like maybe a little like the 15-30 minute trend we use. That's going to be the best way to approach both of these. Implementing them, kind of going to be up to you on which one you want to do. Last thing is when and where to use it. Your best times to use it are going to be during so for the breaks of highs and lows of the candles. Real quick before we get on to that, is these time frames. So we were on the hourly time frame this whole time. Now we're not going to flip through because it's just going to get too repetitive. But the smaller the time frame, kind of the weaker the confirmation. So if you're taking breaks of highs and lows on the 5 minute, it's going to be much less probable than on the hourly. So just got to be aware of that. It'll still work. It's more than likely not going to be as probable as the higher the time frame you go. 30 minute is good, hourly is really good. 15 minute is pretty decent depending on the session. If you're going to do the 15 minute, I would say London or New York are going to be your two best sessions for that. Asian session, so with the time frames, your Asian session, the breaks of highs and lows in Asian session is not going to be as great, especially near Tokyo. In the Asian session, there's a lot less volume than the other two sessions, so you're going to want those closes in your direction first, so you know it's been kind of like confirmed that there's either a resistance or a support in that area, and then that would be good for that. So Asian session, again, I think the breaks of highs and lows can work, but if you're going to use them in the Asian session, definitely use the closes with your direction and then the break of high and low after that. That would be pretty solid for the Asian session. Otherwise, if you just like the closes, that works pretty solid in the Asian session as well. Only thing is you got to be aware of the session opens, because volume could come in, do something you don't want it to, and then continue right back in your direction. So you just got to be careful of that. If you see these session colors here, so this kind of gray brownish looking color, this is the New York session. My trading time is actually right at like 4 a.m. Sometimes 2 when I'm up, but 2 and 3 for the morning session, and then into just before NY open. So if you look at the volume kind of in these candles here, resistance 1, support 1, breaks of highs and lows of 1. So your high volume sessions are going to be much better than your low volume sessions. And then Asian sessions here. This is Asian open right here at 19. And the hourly, that would have worked. This one broke the high of this one, but then didn't, and price came down. So that would be Tokyo open, breaking all the lows down, kind of dwindled its way down into session. Next page here. Look here, this one broke the low here. Also broke the low here. This one broke this low, so it's breaking the lows, but then it goes up. This one here, higher low, higher high. Okay, that looks good. This one broke the low, didn't break the high, and closed bullish. Then this one broke the low, break the high, and then this one broke the low and the high. How Asian session is going to be a little less consistent than our morning sessions whenever price isn't ranging on GJ, which would be the only exception to both of these. So, very last thing before we head off is going to be, if it's ranging, let it come out. Let it get out of there. So if it breaks above all the highs of the wicks, maybe that works, maybe. But you're better off letting it pull out of that area, up or down, whichever way, and then returning to it, creating resistance or support, whichever side it breaks, and then looking for your entries there. Those will be the best way. Manage both of these. Staying out of the range. Really, the range will lower your probability. So hopefully this wasn't too repetitive, and it was kind of helpful on two different entry styles you can use. They're both pretty equal in terms of win rate. If you combine them, then you will have a higher win rate, but then risk to reward is diminished a little bit. But with a higher win rate, maybe that's beneficial. So hopefully you can weigh out those pros and cons and use it or not. And again, if you're using one and it's not working, or you don't feel good in that trade, try the other one, or maybe try both of them combined and see if that changes anything for you. Because trading is just all trial and error till you find what works. So hopefully what we went over, if you haven't found what works, might help you do that. Thank you for watching, and I will see you guys next time.